volume IQ, and some of the best practices.
Volume IQ, what we're going to talk about today are some couple best practices, but we're going to start off talking about the action zones. And we have a new feature being released, and not just a nice little convenience feature that we're going to talk about for volume IQ. So basically, volume IQ is based on the concept of a volume profile, and we could see kind of a standard volume profile here on the right. This is the volume profile that volume IQ is based around, and it does have some features that aren't perhaps common in all volume profiles. For example, the gradient coloring. So we can see that in the areas down here, and if you're not aware, the way that a volume profile works is it's a histogram displayed like this, typically on the side of the chart. And these bars in the histogram are a depiction of how much volume was traded at that price level over the historical look back. So if we look here in the histogram, where it's harder to see, it's more transparent. We use like a gradient coloring method to show the areas that have more volume traded and those that have less. Around 20,200 on MNQ. This is from about a year ago. This was the amount, not a lot of trading volume was traded there. There wasn't much time the market spent there. Whereas in this region down here, 19,000, let's say 800 to 19,920, a lot of trading activity happened and trading volume happened there. A lot of contracts or shares or whatever it might be, crypto, exchanged hands between market participants. So one thing that we made an observation about when we were creating volume IQ and thinking about ways to trade a volume profile is that not only is a volume profile a depiction of the amount of trading activity in an area, but a lot of the time it's also a depiction of how much time the market tends to spend in that area. And that's pretty logical if you think about it, because of course, in order for this many contracts to be traded, so like let's say right here, a lot of contracts traded, or up in this region, a lot of contracts traded, well, necessarily, generally, unless there's just one massive block order, the market has to tend to spend a lot of time there in order for all these contracts to be traded, throughout the bars of the historical look back over time. So we can see here, for example, let's look at this little low volume area. Well, it coincides with this. Price didn't spend a lot of time there. It just went up again, and then it never went back down there. So we can see that correlation between time spent in an area and volume traded. Up here, though, price has been lingering there a long time. So we can see, the amount of volume has gone up. Similar over here. Look, price stayed at that level for quite a long time, just trading flat, which is why we see this inside of the volume profile. And then it starts to create this look of what basically appears to be peaks and then valleys. And we call them action zones. Now, the action zones that have high volume, so we call them, they're high volume nodes inside this histogram. For example, this one, or this one. Well, we know historically that price tends to spend a lot of time there when it enters that region. So we actually can make the assumption, at least based on history, it's not always going to be the case, that when price comes down into that area, well, a lot of traders or the market have traded contracts there, or they tend to place orders there. So if we drop down to this little floor right here, this high volume area in the histogram, we might expect the movement to slow down because there's a lot of defense or activity that tends to happen at that level. Similarly, if we start plummeting and then we lose this level, well, and we're heading downwards, we might expect price to just drop really quickly through this area because historically, there doesn't seem to be a lot of market participation there and price just tends to flip through it. So let's take a look over here. So kind of like what I just mentioned, traders are interested in entering here, but they're not so willing here. I guess they don't care about that. They're focused on maybe the next upcoming level. In this case, maybe the 20,500 mark and then the 20,000 mark. And in between that, the market's like, okay, we've already taken our positions. So not so willing here. Interest picks up again at these high volume levels. So we can see, for example, here, let's say, okay, there's this big high volume node. We're on this candle. We start dropping. We can make that assumption that when we get to here, it's just going to plummet right through because there doesn't seem to be a lot of liquidity or buyers and sellers acting there. And we could see what happened. Well, this is kind of the future of that example. That was the circle we had here. Price dropped, kind of tried to hold this high volume node, and then once it broke it, it fell really fast down to the next area where there was high volume. So we call these tier 1 and tier 2 action zones. So let me just open up a chart right now. So I'll look at MNQ. So here's MNQ today on the 30-minute chart. So we can see on volume IQ, there's all these different blocks here, these little rectangles. Now, if you can kind of make it out, let me just actually increase the font size up here. Let's put it large. And I can actually, so we use these rectangles to depict what we call tier 1 action zones, which are the low volume nodes where price tends to accelerate, and then tier 2 action zones with the bigger squares, which are the highest volume nodes. We call them the zone of control, the most important kind of liquidity level on the chart. And when price enters up into these areas, it tends to slow down. Trading action tends to slow down, or there tends to be a reaction. And this offers trading opportunities. And one thing we can do, actually, now this is the new feature that we're going to be pushing out for all platforms by the end of the day, but it's already out for TradingView, is, I think Richard might have asked for this feature, I forget who it was, but now we can turn off the tier 1 or tier 2 zones if we only want to pay attention to the most important one, which is usually this one right here, the zone of control. So let me just wait for this to recalculate. And now something I noticed here, just to show how important these zones are, let's go in replay mode here, back to the start of today. Or actually, this is yesterday at 5:30 a.m. Let's take a look at what happened on the 30-minute chart. And, you know, I was mentioning that those zones of control, the highest volume nodes, let's take a look right here at this slide. This is a good example. On this chart here, this is the zone of control. It's the highest volume node, just like we have up here on this chart. Well, when price comes up to it, we tend to get a reaction because a lot of traders have exchanged shares there. A lot of positions have been opened there, and those positions might get defended, or this might just be, you know, a signal that it's an important level on the chart. And it's not surprising to me that it's up near right below 25,000, because of course people are thinking, hey, over 25,000 good, under 25,000 bad. A lot of trading activity happens there. But what I noticed here in the 30-minute chart is, look what happened. We started flying up the next day. Let me just wait. Boom. And where did we finally stop flying up? At the zone of control. That's what we call the zone of control. And you can see it actually almost came directly to the center of it before it got rejected and came back down. And Volume IQ actually already showed us, look, there's lots of sellers here. These are zones of sellers. So this wasn't a surprising reaction, especially if we had MA rush on or something, which would have showed us that we're already bearish and to expect this to act as resistance. But we can see here, that's kind of, I'm just trying to illustrate how important these things are as areas of control, whereas the lower volume areas like down here, it's not going to be surprising if we drop quickly down there, through there, because the market doesn't seem to spend a lot of time there. So this is what we call a zone of control. On TradingView, with the newest version, we've also now added in some alerts. So you can have an alert to tell you when price has entered into that zone. So you would have gotten an alert on that morning example on this candle that I was just showing before when we entered the zone of control. And you can also check for when we crossed under it through the center or above it from below. And the reason for that is, one second, there we go. Okay, is a trade setup we like a lot, or I like a lot especially, is a shift in control. Basically, what this means is price crosses that area. So we saw that example on MNQ on the 30-minute where price flew up to the zone, didn't really cross it, or actually didn't even reach the center, then got rejected. So that wouldn't be this case. But imagine it did fly up to that level, and then we crossed it. So imagine this went differently. We flew up to the zone, and then we actually broke through it. Well, that would be a sign that there's now a shift in control in the market. Because we used to be, all the traders that perhaps were long at that level used to be underwater whenever we were down here. But once we break it to the upside, let's say we cross above it, the control of the market would shift in favor of bulls, because now they've got that acting as support. All of that historical trading liquidity is now kind of backing the direction the market's going, or the way the chart's going. If we cross beneath a zone of control, well, the market's shifting in control in favor of bears relative to that important level. Now, this shift in control trade setup is an example, like right here. If we broke above this, especially if we've also got bullish momentum, this is an easy trade, because if we take a long on that cross, we can just place our stop loss somewhere right on the other side of the zone. So like maybe right here, or maybe we use a little local pivot. Maybe there's a liquidity level, which is the logic behind our 1IQ indicator, which combines all of these methods into one to help find trade setups. It's easy trade management. You get in and then you exit if it fails, right? If it crosses up and then it comes back down, just get out. It's not going to be a big loss. But if it was right, then there's a potential that this move continues quite a bit. So this was an example. Let's say price crosses above. This is a long zone of control trade, stop loss below the zone. And a low volume node, this is one of those tier 1 zones where we said, hey, price tends to move quickly there. Hey, that might be an accelerating factor. And this is the candle where we would have entered. This was an example on gold, I think, from a year ago. Look how low priced it is. And we crossed above, accelerated quickly through that zone, started to stall out in the area up here where there's high volume, right? Price moves up through the zone where there's not a lot of volume, as we've been discussing today, and then hangs out a bit in the area that has a lot of liquidity, and then moves up even more. The last takeaways is zones of control. So those tier 2 zones, when price tests them or when price crosses through them, they can make trade opportunities. So we saw that test where price got rejected on MNQ is a great short opportunity, and we've seen that when there's a cross, it's also an easy reward to risk trade. And the final thing that I didn't get to speak too much about is using these bias blocks to your advantage in profit taking and stop placement. So here, for example, on this chart, we shorted up there. A nice spot to take profits might be down here where there's buyers. We might see that, starts to find support down there. So use all the information from the indicator that you can.
If you are interested in trying out and checking out our volume IQ indicator, simply go to tradingindicators.com/volume to see how you can obtain volume IQ for your trading, as we call the next generation volume profile trading. It's, as mentioned before, one of our most complex and powerful indicators because it goes behind the scenes to see what's really going on. Beyond rogue price action in terms of volume and high volume nodes, low volume nodes, bias blocks, and so forth.